All right, what is up, everybody? What's up, traders? What's up, tycoons? Why is there a Santa Claus rally? We're going to break down the Santa Claus rally, okay? And is it even real? Right, we're actually going to go over the data in today's video, give all of that to you guys. We'll talk about the most wonderful time of the year, okay? And go over some back tests, behind that. We'll also talk about, why and how the market reacts typically around holidays and long weekends, okay? We'll go over some of the data for December and January, which are actually some of the best months in the stock market. Okay. We'll take a look at the January jump, really break that down for you guys. And then there's also this back test here going over all of these different holidays and a strategy of buying 2 days before and then buying one day before. And we'll take a look at the results. They're very, very shocking. Okay. Markets tend to see increased trading activity and higher returns the day before a holiday, right? That's a phenomenon known as the holiday or weekend effect. And we're basically going to break down all of that in today's video. It's going to be short, it's going to be sweet, and it's going to be really informative. So I think you'll enjoy. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free valuable finance content and free trade ideas. I try to sprinkle in 1 to 2 free trade ideas, and this is what they'll look like, right? Highlighting the conditions on the chart, showing you guys the actual chart itself. Okay. And many of these trades have worked out very, very well. Just take a look at the last three. Okay. Teladoc ran up over 14.5% from the time of the newsletter. We have PayPal here running up over 10% since the time of the newsletter, and Rivian running up over 40% from the time of the newsletter. And that's just the last three trade ideas. So if you're fans of free, valuable content and you want free trade ideas coming directly to your inbox, make sure to sign up for that. I try to do about 1 to 2 a week. And the reason being is because it's about quality over quantity. So I'm not spamming you guys with 5 to 10 different stocks every single day, trying to brag about one that pumped up 5%. But rather, give you guys a 1 to 2 high quality setups that you can manage your risk accordingly with. You can also just join the Investment Intelligence Discord itself. It's only $10 a month. And in there, you get access to all of the different trade ideas, all of the different analysis. This is where people are making, really great plays, all right, off of the trade ideas and off of the analysis. We talked about Teladoc, right? We talked about PayPal. Okay, Carnival Cruise Lines, SoFi, Chewy, those were a couple other plays that weren't in the Discord, okay? Or weren't in the newsletter. Those were in the Discord. So that's where you'll get access to everything. Anyways, let's get into it, okay? So we talked about this holiday or weekend effect and the fact that markets tend to see trading activity, increased trading activity and higher returns the day before a holiday or a long weekend. So is that all we should know, or can we look further into the data, right? And so when you take a look at long weekends and holidays, share prices often rally ahead of long weekends and 3-day holidays, such as Thanksgiving and Independence Day. We've got Christmas and we've got New Year's coming up. And this has been attributed to simple optimism and high spirits among traders. There's also a more fundamental basis, however, as consumers tend to spend more over holidays, especially ones like Christmas. This can push up the share prices of retailers in particular. Okay. So, think about optimism right now. Okay. They're saying it's attributed to simple optimism and high spirits. And we've definitely got that right now. Okay. Unless you're a perma bear, most people are cheering right now and celebrating and really thinking that the stock market is going to make all-time highs. We've already seen QQQ make all-time highs. We've already seen the Dow Jones make all-time highs. And now, everybody's waiting on the S&P 500 to make all-time highs. Now, the general strategy is to purchase equities 1 or 2 days prior to a holiday. Right? Short-term traders would look to sell just after the holiday, while longer-term investors would wait until year-end. But both strategies have been proven to be profitable plays. The whole theory behind this is that traders are lightening up their positions, aka selling, prior to the 3-day holiday in order to avoid any unexpected bad news. And then the selling pressure drives stock prices down, making those days a good opportunity for buying lower in the range. Here's the average pre-holiday results over the last 50 years based on the S&P 500. And you can see here, when you take a look at Christmas, okay, and you buy 2 days before, sell at the year end, right, -7%. Okay, so, nothing crazy, nothing screaming bullish right here. But look, when you buy 1 day before, it's a 15% return. Okay, New Year's, Buying 2 days before, selling at the year end, 31%. Buying 1 day before, selling at the year end, 19%. All right. So, those are the more relevant holidays, but you can always feel free to take a screenshot of this if you want to take a look at some of the results of the other ones, such as Independence Day, Labor Day, Good Friday, other things like that. Now, when you break it down month by month, all right, and you take a look at the returns since 1960, January, November, December. Okay. Now we have April right in here, but look at this period right here. Okay. Basically from, October, all right, into January, the stock market typically on average sees very, very good returns, right? Near 1% in each of those months, right? October just below 1%, November above, December above, and January above. So this 4-month time period right here is a really good opportunity historically to start making some money potentially in the market. Now, of course, past performance, isn't indicative of future performance. But if you are someone who likes seasonality, this is a really interesting period right here, and I really, really like a lot of this data. Okay, so thinking of, where we're at right now, December has already been a very good month for the S&P 500. We'll see if that continues, and we'll see if that continues into January, where January historically has a very nice return as well. When you look at January and the January jump, stock markets tend to perform well at the beginning of the year, as this is when many investors have fresh capital to place into the market. They are therefore more likely to buy shares and push up prices. Historically, shares in small cap companies benefit most from this effect. So, if you're someone who doesn't want to buy the Magnificent Seven stocks because you think that they're overvalued or they ran up too much, right? Maybe small caps are a good place for you to look at, right? If you look at the IWM, the Russell 2000, it's definitely not at all-time highs or approaching all-time highs right now. So perhaps there's some opportunities there that you can look to play in individual names, or, if you just want to go into, the index itself, maybe that's something, just to think about, right? Now, for the same reason, however, January is often a volatile month for share prices with large, erratic price moves as trader activity surges. So you may see big swings up and then big swings right back down, in a very short time period. But this month is also closely watched because many traders believe that's how the stock market performs in January will foretell the performance for the rest of the year. So they look at January basically as to whether or not if the stock market is going to perform, good or bad, basically for the rest of the year. A popular stock market saying is that as January goes, so goes the year. This refers to historical studies showing that when the S&P 500 rises in January, it is far more likely to be up over the entire year than when the index falls in January. So we'll look to see if this strong December that we've had can spill over into January, and that could be a good thing or a good sign potentially even for the next year. Now, why is there a Santa Claus rally? Now, one reason could be an injection of funds into the market. Mutual funds need to rebalance to account for accounting and tax issues. And at the same time, there's very little macro news during this time of the year. When there's a vacuum of news, there's less to worry about and prices tend to go up. However, we also have to factor in that the turn of the month has, in general, shown a very positive effect. Moreover, most people are on holiday and enjoying their time and see no clouds on the horizon. Thus, there are very few reasons to sell stocks unless you get a higher price. Now, the most wonderful time of the year, the Christmas holiday effect, aka Santa Claus rally. Let's break it down. Okay, so one of the best periods of the year is just after Christmas and the first days of the next year. We have covered this in a separate article. We kind of talked about that in the beginning. But basically, let's make a twist where we go long at the close of the first trading day after the 20th of December and sell on the first trading day of the new year. Okay, so long on the first trading day after the 20th, all right, and sell on the first trading day of the new year. This back test, if you take a look, there are 60 trades. The average gain is 1%. The win ratio is 67%. The profit factor is 4.8, and the max drawdown is 2.9%. This is pretty solid results here. Okay. Now, if you take a look at this back test, where they enter in at the close on the Friday prior to the options expiration week in December, and then they sell at the close of the third trading day of the new year, right? This strategy has produced 1.6% returns per trade. The win ratio is 72%. The average winner is 2.98%. The average loser is negative 1.8%. and the profit factor is 4, with the max drawdown being 11.7%. So this backtest period includes Christmas Day, and they can safely say there's a Santa Claus rally in the stock market. Now, this strategy right here is pretty interesting to me. This is one that I might actually do, just to test it out, not telling you guys to do it. All right. And throw a little bit of money at it, nothing crazy, and see if I can get into that average win ratio, okay, of 72%. I like those odds. So I don't mind, testing it out with a little bit of money. Now, this is a different back test here. And so in this one, they go long at the close of the first trading day after the 20th of December and sell on the first trading day of the new year. Um, it's a small change compared to the Santa Claus Rally backtest number 2. But in this one, the average gain is 1%, the win ratio is 67%, the profit factor is 4.5, and the max drawn on is 5.9%. These are still some pretty solid results. So that's it for today's video. Just wanted to go over, everyone talks about Santa Claus Rally, and not too many people know what it means really even, right? Is the stock market supposed to rally before Christmas, after Christmas, on, the trading day before Christmas, after Christmas? People don't know. So hopefully you found this video good. You learned something. If you did, you guys can head on over to my Ko-Fi page, click on this commissions tab, and you can actually book a one-on-one training session with me. Okay, I do these little coaching sessions all the time. They're available in 30-minute or 1-hour sessions, and you can book those directly through that Ko-Fi platform there. Okay, don't forget, you can also sign up for that newsletter where you get free trade ideas sent directly to your inbox. Okay, and that's where again, just the last 3 trades, and really many of the trades from the newsletter since I've started it, a few months ago, have really just been all working very, very well. All right. It's not just long positions. There's also short trade ideas and things like that in there. So sign up for that. It's completely free. And if you want to sign up to the Discord, all right, and get access to all the different plays, all the different trade ideas, analysis, you guys can head on over to the Investment Intelligence Discord using the link in the description. All right. And be happy to see you there.